All right, everybody, let's get started. So thank you for attending tonight. I really appreciate it. And I think you're going to learn a whole lot of information you didn't know before. So I wanted to introduce our speaker tonight. I'm going to let him do his bio because I think people can explain themselves a little better than I could just reading off a screen. But tonight we're going to have Larry Pendleton talk about contractors because everybody knows there's always more to learn on dealing with contractors and basically contractors and taxes. So go ahead and take it away, Larry.
I am having a bit of a connection issue, so I'm
Uh-oh.
gonna try to close some stuff down.
Uh-oh.
Uh, can y'all hear me?
I can hear you now. Got a lot of technical difficulties.
Trying to close. I think I had that much stuff open up. That. Cool. Is that better?
We can hear you.
Okay, great. Sorry about that. Good evening, everyone. Larry Pendleton Jr. Nice to meet everybody. I am a CPA out of Norfolk, Virginia. I've been a CPA for over 8 years. I've been in the accounting world, tax slash audit as well for over a decade. I am senior partner of a small niche firm called PC Financial Services. Me and my partner Terry Conyers, we look to add value to other professionals in real estate through tax planning and accounting services. Appreciate you having me on, Alex. I look forward to adding value and helping where I can.
I believe you should be able to share your screen for your presentation.
Awesome. Let me do that stuff. Can everybody see? We good to go? Awesome. So contractors and taxes and what you all need to know before the end of the year. Mind you, I am from Virginia, so if I have a bit of a country slaw or slang, I apologize for nothing. So, but yeah, so basically, on this call, I'm assuming everybody is investing in real estate one way or another, whether you're doing private lending, whether you are a contractor, whether you're investing in buying homes, or you're a flipper or wholesaler. Like this is going to apply to you in one way or another. And I say I'll try to keep not get too accounting with the terminology. So, but like I said, I hope this is really valuable for everybody involved. Bit of background about me. For those who are familiar with my presentations, you are looking at another all-exclusive PowerPoint created by my wife, Whitney Pendleton. So if you see jabs at accountants and whatnot, that is because she put this together. Love you, baby. I see you on the call. Once again, like I said, born and raised out in Norfolk, Virginia. Went to a small college down the street from here called Women Mary. Studied accounting ever since high school. Didn't work out with the high school teacher that got me hooked on accounting, but like here we are. I think things worked out for the best for everybody involved. So I love real estate, as it obviously says right there, for the fact of the tax benefits involved. Because like yes, you can make a lot of money in real estate, but you can also lose a lot of money. But the taxes involved if you're not appropriately like strategizing what you're doing. We have my two boys and Whitney there, Larry the third and Wesley, 4 and 1 respectively. driving me crazy. So the gray in my beard in the picture is really from those two, and I'll spare Whitney. She kind of helps with not keeping it gray. So there we go. Bit of background about me. Before we get started, just a quick disclaimer. This presentation, anything that's discussed is really more for general informational purposes and should not be considered as legal, accounting, or tax advice directly to what you have going on. If you, I'm happy to answer any questions, but to not really know your full picture, it's best to contact your tax pro or reach out to me directly for anything that you have particular questions on that we can go deeper in detail. So I can answer what I can at a high level, but detail wise, you'll have to talk to the person that's deeply involved with your information. So what we'll be covering today: expensing versus depreciating repair costs. Why that's important is because I want everybody to walk away from this having a base level understanding of the type of expenses that you can write off immediately, what you have to depreciate, so you can have those conversations with your contractor when it comes to different repairs and rehab that you have going on. As mentioned, we're going to talk about how to qualify certain repair costs with the help of your contractors. Filing 1099s, definitely a big deal. And then we'll summarize it, kind of a now what type of thing, and where to go from there. And then, like I said, we'll open up for Q&A. So hopefully not to keep anyone too long on a Sunday evening. Expensing versus depreciating repair costs and why expensing is better. The big thing we hear a lot about in real estate is depreciation, that phantom expense that allows you to just write off, like basically catch up the costs and write off, have multiple years of, okay, I can take this one asset, depreciate over however number of years that the IRS allows, and I get this expense on an annual basis until the cost is recovered. A great deduction, and I'm not taking that away from it, but it's a great deduction most of the time, not all the time. And we'll go into further detail of why is that later in this slide. Expensing is great all the time, to be able to expense something because you're incurring it. The year is fully deductible that year that it's incurred. And I just want to kind of give just high levels of like why you want to be able to expense over depreciate certain repairs. And then the reasoning for that, it's a little finance language, the time value of money concept. And just paraphrasing the definition of it, the dollar is worth more today than it is in the future. So to be able to expense your repairs today and not have to carry that cost over years and just recognize the year that's occurred, that's always going to be better. Expensing also helps avoid paying capital gains tax on recapture depreciation. What is depreciating recapture? The simple way that I like to explain to people is that when you're investing in the real estate, this is mainly for your buy and hold investors, those landlords, people that have rental properties, not so much with flippers. So when you're buying investment properties to hold long term, you are partnering with the government to provide housing to the masses, depending on how big your property is. Part of that benefit of partnering with the government is depreciation. And so they're saying, like, hey, you can have this expense kind of carried over year after year. Once you decide to sell that property, you basically have broken that one agreement with the government, the partner, and now they want to catch up all depreciation that you claimed, called accumulated depreciation, and you'll be taxed on that. So can get very costly because it's always like people get wrapped up in bonus depreciation, and yes, it's good, but you eventually will have to pay it back if you do decide to sell. And there's, I mean, everybody say whether you go into depreciating all of that and whatnot, we'll go further into that in the next slides there. Sorry, got this. I thought there was some questions popping up. Before I move forward, questions. I'm gonna take a step back, let the people digest on that for a little bit. Any questions that I can help address at the moment? Are we good to keep going? Cool.
I was wondering if you could give an example of what expensing something might look like versus doing depreciation.
Okay. Actually, let's keep moving with that, and I think I can probably provide some decent examples to help at least lay that baseline understanding before giving examples. So this is basically how we're like qualifying repair costs as an expense. So to your point, Alex, or to your question, the IRS does have regulations that provide safe harbors and different tests to help determine what a repair cost is. If a repair cost should be depreciated or it should be expensed. A lot of different factors and criteria. A lot of times it includes dollar amounts for the repair, as well as how the repair is being invoiced. Prime example is the de minimis safe harbor, basically saying that any expenditure less than $2,500 you can expense in the year. That changed in 2017. I hope I got the years right. It used to be $500. So now, okay, if you're replacing a HVAC unit and it's less than $2,500 for repairs and for materials and labor, you can write that off to that point. Now, if it's over that amount of that $2,500, there are other safe harbors. There are other tests that you can use to help still determine whether or not you can depreciate it, or if you can expense it, or if you have to depreciate it. And how that repair is invoiced also plays a factor. So let's just say that same HVAC unit costs $4,000 to replace material and labor. You are allowed to have your contractor break out materials and labor into separate invoices if it's going to help you get below that threshold of $2,500 from that standpoint there. So you have an invoice, let's say it's $3,000 or $2,000 for the HVAC equipment and material, and it's $2,000 for materials. I mean, for the actual for the labor itself. So together, if it's all in one invoice, you'll have to depreciate that. If you have that broken out into separate invoices, now you're able to expense it. And then also, like, what's being repaired also plays a factor into those criteria, and how is it being repaired? Like, is it being completely replaced? Is it being restored in any type of way? Is basically you kind of go into your betterment adaptation and restoration test there, determining whether or not you can expense it or depreciate it. So does that help answer your question, Alex?
I have a question. Hi, Larry. This is Maria. So
Hey.
does it have to be like two separate invoices, or it can be like one? I just started typing the question, but I thought like it's better to ask. Does it have to be two separate invoices, or it can be one and then broken down? Let's say the invoice is 4,000, and then do I need two separate invoices? One 2,000 for, let's say, the labor, and another one for the material, or it can be one invoice and then the cost broken down?
Now there's multiple facets to it. So you still want to itemize invoice of everything material wise, but if it's going to be materials and labor, and because it's for the same item, if they itemize, okay, the work for that HVAC unit is going to be for this amount. Let's just go back to our $2,000 number. even though it's itemized separately on the same invoice, because it's for the same repair, the material and that labor, the IRS is going to see that as one item and just lump it in as 4,000, and you're supposed to depreciate that. So, but they're saying like, okay, if you just break it out to just having a separate invoice for invoice for just labor, then you're allowed to expense both of those in the year that that the repairs occurred.
Thank you.
And I said we'll get into how to get your contractors involved, or I mean, here's how your contractors can help with that. And I said to providing of this the itemizer, the scope of work, and the invoices, so that you can know like, hey, what work needs to be done, what's the cost of. Okay, we need these things broken out in particular. Especially the labor versus material invoice, and then timing of project, especially if you're investing in the multifamily, because you can just have one HVAC unit that may be $5,000 just for the material, but it's one unit of, you have a 10 unit. So okay, is that a material piece of the whole building itself? And in the IRS eyes, that's no. It's okay. It's basically 1/10 of the entire asset itself. That's not a material fix. So that kind of goes into the like what's being repaired and how it's being prepared as well. So, but like I say, if you have like same thing in multifamily, you have everything. All the HVAC units have to be replaced. Okay, maybe time it, or where you can do a certain number in year. In the year that in 2020, and it still be roughly less 30% of the entire building HVAC units, and then do the other piece the next year, so that you can somewhat break up those costs. So that's just how you can kind of work with your contractor, and like is additional work for them? Quite possibly. I mean, they already are kind of breaking stuff out in the scope of work. And providing prices, and you're already kind of shopping around anyway, so you're not getting itemized scopes of work and for the purpose of doing the work yourself unless you want to. But I mean, you're going to be shopping that around anyway. So these are just, and you can somewhat bring your contractor in with your tax pro and explain, okay, here's why I want to do this. I want to be able to write off as much as I can in this year. So what's the timing of kind of working with getting those invoices and stuff set up there? Any other questions before we kind of move on?
I had one real quick. Since you mentioned, for example, like single family, the HVAC, goes out and you spend $2,000 to repair it, and you could potentially expense it at that point. So what happens if it goes out again and you spend another $2,000? Is it by incident or by equipment, like piece of equipment?
It's by incident, or it really is like that's the unit. The unit of property is the HVAC system itself. And like I said, $2,000 to get. Like I said, anyone that can get an HVAC for $2,000 completely installed, like, please send that guy my way. But yeah, so like it's really at the invoice level. So they're basically saying like, okay, here is everything on your invoice, because that's what the supporting documentation would be. So like same HVAC next year, like the same year, but it's a separate invoice that occurred. Like, okay, like we had Larry do it for 2,000, and he screwed up because he's not an HVAC guy. He's a CPA, and who asked this guy to do the HVAC work. So we had to come back and bring in Eric, who's actually is a contractor, to come in and fix up what Larry messed up.
Larry, just a quick question. Does any of this make a difference as to whether or not the property is owned by the individual or by the LLC?
No, it doesn't. Whether the LLC individual, they like the regulations apply to both.
Okay, thanks.
Good question though. Any other ones? Great. So 1099's kind of a big deal for a number of reasons. Mainly because it's a lot of penalties involved, but starting in 2020, I mean, even before 2020, all 1099 had to be filed for anyone that's that you paying anyone or a business over $600. Is now called the 1099 NEC, or the non-employment compensation. It used to be all reported on the 1099 miscellaneous in box 7 for non-employees, so they decided to just kind of break it out separately into its own 1099 starting in 2020. There are exceptions if you're making a payment to a C or S corporation, because they are filing separate taxes as well. Rents collected by property managers, of course, like the rents themselves aren't going to be 1099, because that is what the property managers are going to report to their landlords on their 1099 miscellaneous for rents collected. And then any payments made via credit card, because that's reported separately on 1099-K, that your contractor is going to receive from their credit card provider that's offering that service. And then your 1099s are due by January 31st of the following year. So like I said, we're already halfway through this year. You may want to start having those conversations with those contractors and start getting information that you need in order to properly file those on time. Why 1099 is a big deal? Like, the penalties are huge, and they can be applied for not filing, and they can be applied for filing incorrect information. And to ensure you have the correct information, you typically use the W-9, Form W-9 from the IRS, and that will explain, okay, what their EIN number is, or social security number if it's an individual. If they are a C corporate, S corporate, as mentioned in the previous slide, they're excluded in that realm there. As well as their name and their address, so that ensures, and because they have to sign that, so you know that they are properly giving you information, so you can report it out properly, and then they should be reporting their own income on their own personal tax return. Because once you issue it to them, like, you're covered. You did what you're supposed to do. If they decide not to file their taxes and report all their income, that's on your contractor there. And depending on what your gross revenue is, when the 1099 was supposed to do, like, those penalties can range from $30 to over $500 per form. And if you're working with multiple contractors, like I say, that can build up quite a bit along the way. So very, very important to get that information out to your contractors, let them know that you will be issuing this, so they're fully aware. And as I mentioned before, like, your responsibility is to get this form to them. What happens after that, that's on your contractor. Any questions?
I have one about the contractors. If you have a couple subcontractors that are working underneath, say you have a GC in place, are you responsible as the investor for issuing 1099s to those subs, or is that something the general contractor will be doing?
You're responsible for your GC, and your GC should be issuing 1099s too, because you're paying them, and then they're paying their the subcontractors from there.
Okay. And then, since, like you mentioned, we're towards the end of the year now, so I guess moving forward in 2021, how would you suggest starting, or maybe even the logistics of this conversation with a contractor? Do you get the bid, agree to the scope of work, agree to the amount, and then at some point you just bring up, hey, I need you to fill out this W-9. What do you suggest to investors?
Actually, just having that conversation up front, even before, if you're interviewing contractors from that standpoint, so that expectation is kind of set forth there. Like, I'm looking to renovate this quad. want to bring you on. Um, Before you even spend the time walking through, I will be requiring you to fill out the W-9. If you're not comfortable with that, then I said that's on you. That's on them. But then like you have a choice there of you want to roll the dice and use them because they're really good and affordable, and they don't. But they, as we know, a lot of contractors like to keep stuff under the table. Or you had the opportunity to kind of move on to the next one, or find someone that is a C corp or S corp, and you don't have to worry about that from that standpoint.
So, Larry, I just want to clarify in the example that you provided with the HVAC system, since that's not really like a full renovation. In that example, you're saying that you're paying that individual $2,000. In that case, you would still issue the W-9 for this for something like that.
Yeah. So if you're paying them $2,000 because it's over that $600 threshold, you will be issuing them. But actually, it will be the full 4,000 if you paid them for the material and the labor. The breaking out of the invoicing of the material and labor to separate invoices is so that you can expense it, and then either way, whether you expense it or you had to depreciate it, you still have to issue them a 1099 for what you paid them that year.
Okay, got it. Thank you.
No problem. Good question.
I did have a question that was sent to me that sort of relates to this screen. If you have someone working on your primary residence, are you still required to do the 1099 if you have some, it's not investment property is what I think the question's asking.
Yes. So for personal residence, that you still require to issue a 1099 at that point. And I said it is not consistently done. And you really have to look at it from the eyes of the government, where you have a lot of contractors who are sole proprietors, or they're just a LLC, and they have really no way of telling what someone is making. Unlike having a W-2 job, your employer sends you your W-2, and they also sends the IRS a copy of the W-2. So the IRS is vouching what you report on your tax return to what your employer said. They want to do the same thing for anyone that is self-employed in that well. And like I said, anyone that's doing the S corp and C corp have to report tax returns on like a business tax return. So they're not as concerned from that standpoint from S corp and C corps. It's the sole proprietors and just LLCs that's reporting on their own schedule C on their tax return.
So if you don't issue them a 1099, the IRS is not gonna know that they made income. Like if it's like, let's say under 600, they made $590, and you don't issue them 1099. So is the government gonna know? Like is IRS gonna know?
If the contract doesn't report it, no. If nothing was issued to them and not report and not submitted to the IRS, like they're not going to know.
So the only
But they
if they issue 1099, that's the only way that IRS is gonna know.
that, and if the contractor reports all their income, or all the income that they made, so that's the only way they'll know. But they also want to vouch it. Okay, the contract says, okay, you said you made $50,000 gross revenue this year. Okay, did you get $50,000 of 1099s? And they may or may not. They may have got some small jobs. They may have been 300, 250 here or there that wouldn't be issued a 1099. So it's never going to be 100% in agreement. The IRS is just hoping they can like vouch a good percentage of it and get a reasonable understanding of how much income that this contract is actually making.
Thank you very much.
No problem.
Can I ask, how is it handled when a repair, let's say, like a hot water heater goes out and it needs to be replaced, and your property management company sends in their maintenance guy to replace it. You want to capture that depreciation on that improvement you're making, right? You're replacing that water heater, but you didn't technically pay the contractor. Your property management company did, and then you paid them back, or they took it out of your rent roll. How does that work?
Yeah, so that would be between you and your property management company, or anything in addition, and then is your property management company S corp or C corp, and you're having to report 1099 if you just have kind of a mom and pop organization that's kind of doing it through their LLC, then and at that point you would be reporting everything that you pay them anyway regarding management fees, as well as in addition to reimbursement for those repairs.
Okay, thank you.
No problem. That was a good one. Anyone else? Everyone else getting sleepy? Great, it's not just me. So now what? So quick presentation. A lot of information, or kind of jammed in there, because as Whitney can testify to, like, there are rabbit holes in those other slides that we can like deeply go down, going into the different safe harbors, going into the betterment, habitation and restoration tests and whatnot from there, where it's like, this is kind of at a high level, but from here, now what? And for me, it starts off with accountability, not for your contractor. It starts with us as investors. It's our responsibility for the profitability of our business. Is also our responsibility to protect our business as well. So if you want to maximize your deductions, and so yes, you want to now get the understanding, okay, what can I expense now to minimize my tax bill, in order to as well as minimize the risk of depreciation recapture down the road, if I do decide to sell this property. That's not the contract responsibility. That's your responsibility. It's our responsibility as investors. And then once again, you saw the penalties associated, and people can try to fly under the radar. If it ever comes up, like, have you done everything we can as investors to protect our businesses, our portfolios from penalties from the IRS for not issuing 1099s or doing whatever we were supposed to do at that point there. Still a lot of great benefits in real estate. It's just, okay, we're just operating differently now, from a more I guess legitimate standpoint at this time. So once we establish the accountability within ourselves, then if we do decide to bring in the contractors, and like now we can hold them accountable for, okay, when I first brought you on, you said it was fine with this. Okay, I want these things broken out a certain way, to hold them accountable from that standpoint there. And why should your contractors even care about this stuff? Okay, you could incentivize them, not just with additional fees, which it may come down to that, because contractors aren't really into this to do a lot of paperwork, and they may not have built the team in place to provide itemized. They just get an invoice. Okay, I'm just going to turn this unit. I'm just going to get this unit rent ready. It's going to be $5,000. Okay, what does that $5,000 consist of? And can you break that down? And if you incentivize them with repeat business, because as an investor, especially for your buy and hold investors, as well as your flippers, okay, I want to keep using you over and over again, but like I said, I'm going to need documentation broken out a certain way, or I'm going to need you to provide me your fill out this W-9 so I can fill out this 1099, issue that to you. And you want to incentivize with referrals, from that standpoint. Like, I'll shoot people your way. I'll let them know that you're investor friendly from that standpoint, where like they're getting business from you based on volume, not just a one-time big hit that they do for somebody's personal residence. your contractor should care, and in this realm of you educating them on everything we just talked about, but bringing in your tax pro to kind of go into the weeds with them. Because a lot of contractors are also investors as well. Like I see Eric Dowd up here, he's Class A. Terrion's up here, he's Class A. So there's some contractors up there, but they are also, I know for sure that those two guys and many others are real estate investors as well, and they have their portfolio. So everything that you're trying to do to increase profitability in your business as well as protect your business, they can do the same for their portfolios as well as how they need to be educated on 1099s for their contracting business. They should be, if they don't have full-time employees, they should be issuing 1099s for anyone that they're paying over $600 in a year from that standpoint there. So that's how we can take everything we just learned at a high level, bring it back to your tax pro, or reach out to me, that's fine, and kind of work and kind of build this base of, okay, how to make sure this is right for you, holding yourself accountable, and then incentivizing and educating your contractor so they would care as well, because they're trying to get in and out without a whole lot of paperwork unless you give them a reason to do so.
That's a really good point, because I feel like there's sometimes an emphasis on making sure, they have their liability insurance in place. Do they have their workman's comp in place? Do they have a business license? All of those things are are they valid? Are they there? But I don't think very often people think about the other side, the financial side, like that needs to be covered, because I routinely hear investors don't even give it a second thought at all. So I'm glad you came to, speak to the group about this, because I think a lot of active investors don't really think about this aspect of it. They usually think of the liability standpoint, from the actual physical liability, not so much a tax liability standpoint.
Hey, who thinks about taxes?
Yeah. You only think about that after January 1st, right?
Awesome. So yeah, definitely crucial, especially for those who are getting to the larger multifamilies, and I mean even with the single family stuff, and you want to do cost segregations and whatnot there, like being able to break out those costs appropriately ensures that your bookkeeping is properly in place. It makes the whole tax year-end tax process a bit easier per se, where like you're not relying on your CPA to kind of take a year worth of information and kind of dissect it for you. Like you're able to kind of track it a bit better, whether you're using Gusto or QuickBooks, whatever system that you want to use. So you're kind of on top of that stuff, and then you wrap in your tax pro from that standpoint there of, okay, how do I maximize this, and align that with your contractor who's willing to work with you on these things as well.
And what sort of documentation would you say to have put together for a tax professional at the end of the year? So you're saying have, statements, maybe copies of the check that's cleared if you wrote a check. What happens if you paid by credit card? How could you show that was actually paid in full? I guess an invoice. What would you suggest?
Yeah, I would say just invoices, and a lot of people kind of mark them down however they can. And save to a Google Drive, because like I said, if you're just gonna give me a stack full of papers, it's highly unlikely I'm gonna look through all of them. So and like I said, from that standpoint, you're really just looking for just invoices per contract that you use, or per service that anyone that you think that you need to issue out 1099 for, maybe even the scope of work. So from that standpoint there, me as your real estate tax pro, I'm just not so worried about, okay, you spent $10,000 on the roof. Okay, what, like, and I'm gonna dig for what type of property this is. Like, does this cover the whole roof or just part of it? Because if there's opportunity to expense, then I want to lay that out from that standpoint there. Or if we need to do a cost seg, so I'm gonna need all the HUD ones at that standpoint to kind of get the cost basis of the property as well. So once I have all of that, the HUD, the purchase of the property, as well as all the work that was done via invoices that were sent out, or even the scope of work, will suffice as well. Then like, okay, we can start digging further into where those tax benefits are.
And just for clarification, who traditionally does the 1099s? Is that something the investor is responsible for, or is that something a tax professional would potentially prepare for them?
It's the responsibility of the investor to determine who they want to prepare it. Now, the investor can prepare it themselves, free of charge, because they're doing it themselves, or they can pay their tax pro to do it. It's the responsibility is me as your tax pro to remind you of, do you have this stuff, and do you need to go ahead and get that filled out from that standpoint there.
And if you have contractors that have worked on property already this year, do you have any suggestions for how to reach out to them to kind of make it in their best interest to provide a W-9 information if an active investor hasn't done that already?
If you have any information regarding their business, where you may even have their business name, then just kind of let them know, like, I will be issuing out 1099s. I have this W-9 if you want to fill it out, but at that point you can probably already find, you got their business name, you can probably find their EIN unless they're individual from that standpoint. But really just kind of phone calls, emails, and texts. Just kind of, I'm trying to get this out from here. So, and like I say, it does become a bit of a challenge just constantly trying to reach out to someone who may not care to get 1099 for whatever their own personal reasons are there. We'll leave it at that.
And is there anything an investor could do kind of retroactively if they had someone come and work on the property and, like you said, they just don't return the calls, they just don't return email? Is there anything that investor could do retroactively, say, hey, I had this person out and they did work, but I haven't been able to get information from them? Does the IRS kind of allow any leeway for that?
I mean, they do provide penalty relief if you do receive a IRS letter regarding it. So it's really more of the reactive piece is, okay, how are we going to react to getting the penalty, like getting this letter that the 1099s won't fill out for these particular reasons.
Okay, perfect. Does anybody else have any questions before we wrap up for the evening? You can either put them in the chat box or you can just unmute yourself and talk directly to Larry. He won't bite, I promise, as you've seen.
I just want to say this was really helpful. Thank you so much.
Thank you.
Yes, absolutely. I thought so too. And I'm not even an active investor.
What are you talking about? You hot in these streets right now, Alex.
All right. Well, I don't see any more questions coming into the chat. So I want to be respectful of everybody's time on a Sunday evening. Larry, I want to thank you for taking the time and sharing your knowledge in this. This was a absolutely wonderful presentation because, like I said earlier, most people, I don't think, take into consideration this aspect of dealing with contractors. Not very often. And look at Larry the Third.
Yeah, trying to get him into the game.
I love it.
I need more lunatics like me in the tax game.
So Larry has put his contact information up on the screen. So if you have any questions, feel free to reach out to him in addition to his website. And he'd be happy to get back with you and work with you. And now is the time before the end of the tax year to make some changes or do some additions or do some changes. So take advantage of the time you have while 2020 is still here and do the things that can set you up better for next year's tax year.
Thank you both.
Thank you.
Thank you.